Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about the top 5 stocks to buy during the stock market crash, right? If we actually go ahead and we look at the S&P 500, you guys can see that over the past couple of weeks, couple of months, really, we've seen so much volatility and so much sell-off from the general market, right? It was hitting highs up here at about $478. And pretty much ever since the new year, we just have seen tons of sell-off, tons of volatility. And you guys can see it went from 478 all the way down to 412. And a lot of people are thinking that this is going to continue to fall down to about 400 to possibly 390. And I definitely think during that time, this could be a pretty good opportunity to pick up a couple of shares of some good companies, not to mention to have some of these companies as almost like a defense, right? Because some of them do very, very well during hard times. So the very first one here is probably one of the most common stocks for recessions. It's J&J, also known as Johnson & Johnson, right? As we look at the chart, you guys can see that comparing it to the general market, this has a lot more growth, right? You guys can see over the past month, we've seen a pretty solid growth. The stock was pretty much going from about 150, hitting highs up here at about 186, which is pretty decent. Looking at the past earnings, brought in about $23.4 billion. They could have obviously done a little better, but they did do good on the EPS. Now, one of the main reasons why a lot of people love Johnson & Johnson is because of it's a pharmaceutical company. It's something that people will always need, whether the stock market's going up or down. People need to live. They need high quality products that J&J offers. So I definitely think that is a very, very good thing. The second thing why a lot of people love it is because it offers a dividend. Now, historically, dividend stocks don't fall as much in recessions or crashes compared to non-dividend stocks. The reason why that is because people are more likely to hold a stock that's paying them a dividend than a stock that's not paying them. They pay about $1.06 per share every quarter, and for a stock that's $180, that's a pretty decent yield. But moving on to stock number 2. Stock number 2 is one of my personal favorites. It's ticker symbol HD. Now, Home Depot here is HD. Over the past couple of weeks, we've seen a lot of sell-off. It did establish some pretty hard support down here at about $300, right? It hit it, and every single time we've just seen a ton of buying pressure near there. So I definitely think that is a really, really good support line. Looking at the past earnings, they've done very, very well. So you guys can see the past earnings report, we did get a little buying pressure from, 300 all the way up to 340, but immediately sold off back down to 300. So I definitely think this is a fantastic one as well. Not to mention, you're going to be getting paid $1.90 per quarter. So this is a fantastic company. Home Depot, they are a home improvement store. So people are constantly going to need water heaters. They're going to need lumber for their houses. They're going to need everything. And that's what Home Depot provides and has. Now, the next one here is ticker symbol WM. Now, WM is Waste Management. Waste Management is a company that obviously handles waste. It's a trash company and a variety, even some sanitation work they do. You guys can see they've done pretty decent work if we actually look at their past earnings. They beat their revenue. They brought in about $4.6 billion that last quarter. Did very, very well. The stock popped up from 150 all the way up to about 166 and slowly started pushing up to 170. And then we've seen a lot of sell-off in the market, so it popped down just a little bit. But this one here, people, no matter if the market's going up or down, people need to get rid of trash and sanitation at the end of the day, and that's what they offer. And I don't care what people say, it's a good company. They bring in a lot of money. You get paid a 65-cent dividend per quarter. It's a great value stock and one that I currently have. And I definitely think this is a good opportunity, given we've seen some sell-off here, to get it, hold it, not even worry about it, guys. Good strategy too for all of these stocks would be doing the dollar cost averaging. Just be consistent, create a pool of stocks on like M1 Finance, and just continually invest in them. Okay, the next one here is the one and only Tesla. And I know this is an untraditional one for these, having like a defense in your portfolio here. But personally, I think Tesla carries so much potential in the long term that if we have that market crash and we see this stock fall down from, 870 all the way to like 750 or even lower, that's just a massive for sale sign to get Tesla, hold it, and not even worry about it, right? Tesla, through everything, they've always done very, very well, beating revenue, beating deliveries, good EPS. Now, the one thing that I would, let you know is Tesla is a growth stock. It does not offer a dividend, and it's going to be more volatile. If we do have a crash, I wouldn't be surprised seeing Tesla go from 870 to, 690 or 640 even, just because of how volatile, these growth stocks can be. But moving on to the next one here is Apple. Apple is a fantastic stock, guys. Very, very common one that a lot of people have in their portfolio. It's historically beat the S&P 500. Looking at their earnings, they've always done very, very well. And given that in Q2, in the second quarter, a lot of companies didn't do very well. Looking at, Apple here, if we actually go ahead and look at it, they beat their revenue. They brought in $97.2 billion, an EPS of 1.52. Very, very well. You're going to be getting paid a dividend to have this of 22 cents a quarter. Right now it's at 157, right on that support line. For me, this is a great opportunity to at least pick up a couple of shares right on that support. And this has done very, very well in recessions. So it's very similar to all the other ones we talked about. You're going to be getting paid a dividend. It's not going to fall as hard. It's gone through several recessions and has been profitable within 3 or 4 years. So I definitely think you have to understand that. This is a great one here. But these are the top 5 stocks that I would buy during the market crash. I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. We will see you guys later. Remember to stay happy, guys, stay positive, and stay safe. Take care, everyone.